Hey guys, welcome back to the channel. Today I'll be showing you guys how to get monthly and quarterly seasonal patterns. And you can run the script for any index, ETF, or stock that's readily available. And we're also going to plot the historical returns for that month. And it will also give us a winning percentage given the track record. So here I'm going to start off by assigning the ticker. And we're going to test the S&P 500 index. We're going to get some data from Yahoo Finance. Now we're going to calculate the monthly returns. Now to get the seasonality, I have built a function called getSeasonality, which the user passes in the month he wants to backtest, and also the starting year for the backtest. And for the month, you can choose any of the abbreviated months that I have listed here. And the starting year must be within the range of the data. So if your data doesn't start until 2010 and you're requesting 1950, it'll just automatically start at the beginning of the monthly returns data. So it'll use up whatever is available. So if we open up this function, depending on the month that the user chooses, it's going to subset data to only those months. And we extract the desired months by using index mon. It'll go ahead and subset the data to only that month using our monthly returns. After we subset our data, we're going to start our data at the beginning of the year that the user passes through. Now that we have a condensed list of returns, we can go ahead and calculate some stats. We're going to go ahead and extract the number of times it closed up for that month, the number of times it closed down or we had negative returns. We're going to calculate our up probability, or the percentage of times it has closed positive given all the observations. We're also going to calculate the average, the median, the min, and the max of our monthly returns. Then we're going to combine everything and return it as a data frame. So we're going to return the month, the starting year, the min, average, median, max, number of observations that are positive and also negative, and also the percentage of times we have closed positive given the observations in our range. So I'm going to go ahead and minimize this function. We'll go ahead and run it, and then we'll go ahead and test the function. So if we take a look at our console, for the month of August since 1950, the S&P 500 has had a negative 14.5% as the worst month in August. Both the average and the median are positive, but very close to zero. The maximum return for August has been a positive 11%. Since 1950, the S&P 500 has closed up 40 times for the month, has closed down 33 times, giving us an approximate 55% that it will close in the positive for this month. Now let's go ahead and plot the historical returns for this month. And to do that, we have built a function called plot seasonality. So the arguments will remain the same. And we'll go ahead and open up this function. Mostly everything stayed the same as our previous function, except now instead of returning the data, we're going to go ahead and plot it within the same function. And we're going to use a bar plot. We're going to plot the positive bars in green and negative in red. And within our title, we're just going to add the winning percentage for that given month. So let's go ahead and minimize this function. We'll go ahead and run it. I'm going to plot the seasonality for August since 2008, and we'll go ahead and take a look at the plot. All right, so since 2008, for this given month, the S&P 500 has closed up 57% of the time, and here we have our axis of returns, and you can see the dates for each bar down at the bottom. So essentially, you can plot any given month using this function. Next, we're going to plot the seasonal patterns on a quarterly basis. So first, we need to calculate our returns on a quarterly basis for the stock, index, or ETF that you choose. And in order to plot, we're going to use plot QSeasonality, where instead of months, we're going to use QQ for the quarter. So you're going to enter a 1 if you want March, 2 for June, 3 for September, and 4 for December. And this function is essentially a replica of the previous one. The only thing that has been modified is the subset. So instead of monthly returns, we're going to use our quarterly returns. And we're going to focus on returning a bar plot as well, where the positive returns are green and the negative returns are red. And we're also going to plot our winning percentage. So I'm going to go ahead and minimize this function. We'll go ahead and run it. We're going to plot the seasonality for the third quarter since 2006. So let's take a look at that plot. There's a strong probability that we close positive for the quarter. We know that July has been a good month. August is trending slightly higher. It kind of depends on how this month pans out to get a bit of a better perspective. Well guys, this concludes the video. I'll leave a link down in the description to my Patreon where you can find this script. On Patreon, I'll be posting the seasonality before the month begins for major indices. But other than that, please consider subscribing to the channel. Thank you so much for watching, and I'll see you guys in the next video.